Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be taking a look at the M1 Finance Roth IRA portfolio. Every week, I add new equity into the portfolio that is able to average down on specific stocks that I'm currently negative in, increase my overall dividend income. Plus, I have dividends that was paid out last week that I'm able to add and include into this in order to reinvest those dividends, increase my total dividend income going forward. So that is what we're going to be doing in today's video. So if you do enjoy the video, hit the thumbs up button below. If you are brand new to the channel, subscribe to the channel. And of course, if you have any comments, questions, going over anything covered in today's video, stock market, personal finance, drop it in the comment section. I always read and reply to all your guys' comments. And of course, I'm going to go ahead and flip the screen here, and we will take a look here at the M1 Finance portfolio. So currently, we are positive here overall in this portfolio. We are sitting positive in this portfolio now since we started investing back in January 8th, 2018. Now, because we're positive, we don't have a whole lot of stocks here sitting in the negative that we can just kind of pick. We do have about half the portfolio sitting in negative, but of these stocks, I mean, a lot of them, Abby, for example, was just recently driven down in the month of January, whereas all these other stocks here, so for the 1 month performance, we can see that we didn't have a whole lot of negative here. We had Pfizer, Kimberly-Clark, and AbbVie. Those are the three stocks that were negative in this portfolio. But what we want to do here is look at a few things before we're averaging down on stocks that we own. We want to look at current value and current equity of stocks that we have sitting in our portfolio. And if we want to add to stocks that we currently have low equity in comparison to our target percentage that we want to have for those specific stocks, we also want to look at what stocks are currently negative. Are we able to increase our overall yield for the portfolio, increase our overall dividend income by investing in stocks here that have dropped by 10% or more, giving us a higher yield of cost, giving us a lower cost per unit, and then overall just increasing our income at a better pace because we're able to buy more shares of these companies at a lower discounted price. So starting here, we're going to look at equity. So equity here, Kellogg's, Cardinal Health, the Southern Company, a few of these here, General Mills, these have all started being added into the portfolio in December, and they are not quite meeting the target percentage of the portfolio. So Kellogg's and Cardinal Health, they're both negative here. Kellogg's being down around 3%, and Cardinal Health being down about 2%. So of these two stocks, they could be pretty good investment positions just because I've already done the research on these companies. I know that they are solid companies that I want to buy and hold for the dividend income. We also have Consolidated Edison and Altria. So right off the bat there, I know there's stocks that are in my portfolio that are negative, that are low in equity to my target percentage that I want to hold, and we can actually take a look at these ones and see if they match. Another thing I also like to look at is to see if they're going ex-dividend here in this month or the next month. That way I can buy into them now, decrease my unit cost, increase my dividend income, and they're going to be going ex-dividend this month and they're going to be paying out here almost immediately. So I can use my spreadsheet for that specific reason. So here I have all of my stocks sitting in my portfolio sorted by the ex-dividend date. So January has already came and gone. All the stocks here that paid out in January, these are like 23.67. Oh, I'm missing one there. 32.50. So I made about $32.50 in that range for January. Yes. So looking at February here, so we have Apple. Apple I know is currently a negative in the portfolio. We have Consolidated Edison. That is one we wanted to average down on, increase our equity in. We also have Cardinal Health here. That's not until March. So we have a few others in here. Let's take a look at Johnson & Johnson. Not down too much. Lockheed Martin. Lockheed Martin's an interesting one. It's offering a 3% yield versus my buy-in yield of 2.74. That could be a good reinvesting point. We also have not a whole lot besides that. So I'm going to be opening up Kellogg's here and Cardinal Health and Altria. Altria is not going ex-dividend again until about March timeframe. So I'm going to be opening up these few stocks. So Apple, for example, there we go. They announced that they're doing their ex-dividend here on February 8th. So February 8th is this Friday. So I'm actually able to buy Apple Monday, Tuesday, Thursday, and then on Friday, depending on however many shares, partial shares I own of Apple, I will get paid out 73 cents per share each time, per share in each partial share. So depending on however many shares I own of Apple, I'll get paid out a certain amount. Consolidated Edison is also going ex-dividend. So here, 8th, 12th, Lockheed Martin later this month on the 28th, Kellogg's, Cardinal Health, and Altria. These were stocks here that didn't go ex-dividend until March. So I can check down here down towards the bottom. And here, Altria generally goes ex-dividend here end of February, first week of March. So I could expect here towards the very end of February, beginning of March, that Kellogg's will go ex-dividend. And Cardinal Health here, as we're kind of looking down here towards their history, we can see that Cardinal Health also goes ex-dividend here, normally at the very end of March. So very end of March. So we have quite a while. If we wanted to add into Cardinal Health at a later point, it's really not giving us a huge discount right now. It's only down 2%. So depending on how that all plays out, there could be positions here going into the future where Cardinal Health could fall. We can see here that the 1 month performance for Cardinal Health is up nearly 10.5% just within 1 month. Could they come back and fall back and give us another 10% discount? That can completely happen over the next 2 months. So at this moment, I'm not as likely to invest in Cardinal Health. Also, Kellogg's. Kellogg's is only giving us a 2.96% discount. It's run up here over the last month, only about 3%. But could Kellogg's come out? I haven't listened further. I don't know if they actually came out with some earnings. I have to look at my notes. But will Kellogg's possibly give us a better opportunity within the next 2 months in order to possibly invest at a lower discount than just 3%? Possibly. So what I'm going to do is go ahead and throw Kellogg's out of there as well. Now, Altria just came out recently. I like their Juul acquisition. I like that originally when they purchased Juul, it looked like they were buying some company that produced around $300 million of revenue, but actually after their earnings report, and they came out and their Juul acquisition, Juul's actually producing around $1 billion of revenue now, somewhere within those ranges. I don't have all my notes kind of written down, but that valuation is looking a little bit better. Altria was offering a 30% discount here. So let's just take a look here at Altria's performance over the 1 month. Look at this. Over the 1 month here, it started off pretty low going into earnings. I was buying up here towards the very end, and then all of a sudden earnings popped up. Boom. This all happened here within a week. So here it went from, in a week, had 11% return. So, it went up very nicely, but at the same time, it's still offering a nice discount of 23.25%. It's also, here I lowered it to 1% just because I didn't want M1 Finance automatically invested in it. I wanted to specifically listen for the earnings, wait to kind of hear what is kind of going on with the future of this one. So I am going to be leaving Altria right there. I do believe it has a little bit more room to grow. Lockheed Martin, let's see here. How much of a discount do I get on Lockheed right now? Lockheed Martin, I'm down 10% on Lockheed, so that's a good one to leave in there. Consolidated Edison, not so much of a discount, down 3.31, but it is going ex-dividend here very quickly on the 12th, so I can buy, lower my unit cost, increase my yield on cost, and increase my income going forward here when it goes ex-dividend, and also Apple. So I'm going to be making 4 buys this week. I'm going to be buying Apple, Consolidated Edison, Lockheed Martin, and Altria. Those are going to be my 4 buys here. I'm going to be averaging down on each one of these because they are all currently negative. Altria, down 23%. Lockheed Martin, down 10%. Apple, down 7.67%. And Consolidated Edison, down 3.31%. I've looked at AbbVie as well. AbbVie is not going ex-dividend again until April. That's quite a ways out. AbbVie could still continue to fall just a little bit more. And what were some other ones here? AT&T also, that one went ex-dividend a little earlier already here. and paid out on, oh, they actually paid out. Taking a look at M1 Finance, at what stocks currently paid out those dividends that are not currently invested. We had JP Morgan paying out $3.30. I believe AT&T should have paid out as well. Actually, we can just jump and take a look here at AT&T. I'm just going to make these buys here, and then we can kind of jet from there. So AT&T, they went to ex-dividend on the 9th, and they should have paid out on the 1st of February. So they have not paid out on the 1st of February yet. But you can see here that currently, when I'm recording this, it's the 3rd of February. I should have received those dividends, but I have not yet received those dividends, so they're just a little slow. We may see those trickle into the portfolio here on Monday, or here within the other days here. I'll probably have to watch for those just to make sure they can actually trickle in there. But M1 Finance, they normally do pay out their dividends. So without holding you guys up too much further, I'm going to go ahead and make these 4 purchases. Now, let's bring up a calculator. I add $115.38 every month of just new equity by 52 weeks. That caps out the Roth IRA for $6,000. I also have $3.30 sitting in there in equity here, just paid off from dividends from JP Morgan. That's $118.68. I'm going to go ahead and buy 4 stocks. So into 4 stocks, I'm going to be adding $29.67. So Apple, I'm going to go ahead and buy Apple here, $29.67. Go ahead and continue and confirm that. Now with M1 Finance as a whole, one of the reasons I like M1 Finance is that I can buy partial shares. So here on Monday, when I make these buys, I'm going to be able to buy $29.67 of Apple. The other one here was Consolidated Edison. Let's go ahead and bring up that one. Where is that one? Here, Consolidated Edison. We're going to go ahead and make a buy here. Again, the exact same thing, $29.67, and confirm that one. And the other one here was Lockheed Martin. We're going to go ahead and go back. Lockheed Martin. We're going to go ahead and buy $29.67 of Lockheed Martin. Continue and buy that one. Confirm. Now, $29.67. That's $89 total out of our, what was our initial? It was $115.38 plus $3.30. So that is, my last buy is going to be $29.67. So let's go ahead. What was my last one? Ultra. Okay, Ultra here. Buy and sell. And buy $29.67. And confirm. So now we have some estimated purchases here. This is because I only have $3.29 sitting in cash currently. This is going to get split up here, 89 cents, 89 cents, 89 cents. But we also have funding going in here of $115.38. That's going in there on Monday. So it's just going to add that automatically, $115.38. It's going to stack the $3.30, and it's going to push it into those buys. So it's going to be buying $118.68 total new equity going into the market this week. So that is it here. We can see Apple, Lockheed Martin. Let's see, just sort this by here. Altria, Lockheed Martin, Apple, and Consolidated Edison. Those are all going to be purchased here on Monday. They're all, by purchasing all of these stocks here, I don't know what I'm going to be buying them at right now, besides that they're going to be bought at a negative position to where I already bought them. But we'll do the math on them. I'll post the post on Monday. Look to my Facebook page. I always post all my buys over there. I should kind of share that out, what I purchased them for, how much I increased my overall dividend income by. So look for that over on Facebook. So that is it for this video. If you guys did enjoy the video, find it helpful as far as how I make my decision and buying stocks that I already hold within my portfolio, that I am averaging down on, that I am increasing my dividend income going forward. Apple, for example, when they go and do their earnings here in May, they're going to be announcing a dividend increase roughly to $2.10 to $3.10 to about $3.30. So that's going to be bumping up my dividend income in May just from buying those shares of Apple. So that is it for this video. If you guys did enjoy it, hit the thumbs up. If you are not yet subscribed, hit the subscribe button below. I highly appreciate it. And if you have any comments, drop it in the comment section. I always read and reply to all your guys' comments. And thank you all for tuning in. I will see you next time. Have a great day. Bye.